Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Wednesday, September 29th, 2010. This morning I'm talking about getting used to slower growth. Now, first I just want to apologize. I haven't had the videos up the last couple of days. I've had some computer issues and actually had to go ahead and get a new computer. So now that this is all figured out, hopefully I'm going to have the videos for you on a daily basis going forward. But this morning I'm talking about getting used to slower growth. And, you know, it's really no secret that economies around the globe are slowing. Countries that have heavy debt burdens have been challenged to find growth, while emerging economies and export-driven countries they continue to thrive. And you know, unfortunately, that's the new normal here in the global marketplace. Now, we're just taking a look real quickly here at the Euro USD. I just want to show you this on a chart. I've got a Fibonacci retracement going up on the 1-year daily chart. The reason I put this up was 135 was acting as a little bit of resistance there. As you can see, that's the 50% retracement on the Fibonacci support, and it looks like it broke through it yesterday. So perhaps 135 is new support. We've got Euro trading at just under 136. Potential next stop is at the 61.8 retracement level at just about 139. So we're going to have to see if that happens. Now, in the Eurozone, economic confidence figures came in higher than expected, and this is happening despite all of the debt problems that they're having over there. Talking about Ireland, Portugal, and Spain, you know, problems with the banking system, but right now they seem to be hanging in there. Now they've also got strikes going on throughout the Eurozone region as you know, citizens there are protesting austerity measures. Now, just want to look quickly here at dollar versus yen. Okay, I'm going to look at this on a 2-hour chart. And last night in Japan, the Tankin Sentiment Survey came in, and also the Capital Expenditure Survey came in, and it showed that business confidence was sinking, that manufacturers were the least confident in 18 months, and that they continued to reduce expenditures to expand business. So that's sort of pushed you know, the Japanese yen a little bit higher here, and it's kind of putting pressure on them to see you know, if they're going to continue along here with the intervention that they've undertaken. Now, just want to show you we just touched 83.5 earlier this morning. That was the first sort of line in the sand we were talking about, but the actual 15-year high here is down at, it looks like, about 82.85, say. So it's going to be interesting to see if you know, the market decides that they want to test what's going on in Japan. All right. Meanwhile, we've got the Aussie trading higher. Okay, leading economic indicators came in, rose 0.8%, and there was a report out of Barclays saying that the RBA may need to hike rates 2 more times this year, 2010. So as you can see, this is a 2-hour chart. Just look at that beautiful uptrend. Wow, we're actually within 2 cents of an all-time high here in the Aussie. I just want to show you the Kiwi as well. Kiwi's actually lower. Okay, still holding that resistance area at around 74. Last night, they reported a widening trade deficit due to declining exports, which reached a 9-year low. Excuse me, a 9-month low. Apologies. Next, I want to look at the Canadian dollar here. We're going to look at the loonie versus USD. All right, the loonie is actually stronger across the board. Okay, they had raw materials prices came in higher than expected, showing signs that they may have some stealth inflation going on there in Canada. There was also a report out of the Bank of Nova Scotia that said Canadian interest rates should be a full 1 percentage point higher, based on something called the Taylor Rule, which uses historical inflation data and other measures to kind of give you a fundamental idea of where interest rates should be. Okay, and lastly, we're going to take a look at the pound here real quick. Okay, pound, well, let's look at it on the 5 minutes, see what's happening. Pound is, well, it looks like it just flipped around to positive here versus dollar, just pulling back a little bit. They had lower than expected mortgage approvals, which shows that the housing market could be slowing. That could, you know, dampen the inflation, which has been at the higher end of the band, just sort of stuck at 3%. But one of the things that's been causing the pound to be a little bit lower as of late, let's just look at this on the 1 hour, is we're getting some rhetoric from one of the Bank of England policymakers, Adam Posen, who says that the bank should go back to quantitative easing measures. Well, I guess it's not going to surprise anybody if I told you that Adam Posen is actually an American citizen, so no wonder he wants more quantitative easing. And quantitative easing is what's been moving the dollar as of late. U.S. dollar index, which is the dollar versus a weighted basket of currencies, is at an 8-month low, and it's basically all because of deteriorating economic conditions here in the U.S., as well as the threat of Big Ben Bernanke and the Fed's further quantitative easing. So that's what we're looking at here in the markets. I just want to talk to you real quick about the ways that central banks sort of manipulate currency. They call it policy action. I'm going to call it manipulation. 3 basic ways. First way is quantitative easing. All right, basically central bank prints money. They go out, they buy assets, namely bonds. Okay, they try and inject liquidity into the system, which increases the supply, which hopefully reduces the value of it. And that's the preferred method here in the U.S. and in the U.K. Now other countries use it as well, but we're the primary offenders, if you will. Now the second way that central banks can manipulate the currency is through actual currency intervention. We just saw this recently with Japan. Actually earlier this year, the Swiss National Bank tried to do it versus the euro. All right, and this occurs, basically, the bank is just selling its own currency and buying the currency of other countries out there in an attempt to actually weaken their own value and strengthen the others. Okay, and the last way that central bank can manipulate currencies through an actual currency peg, where they fix the rate, exchange rate of the currency, and they don't allow it to flow freely in the market. Now, this creates an unfair advantage as it restricts trade imbalances from, getting sort of to a level area. I mean, you're not always going to have level trade imbalances, especially versus China, but that would sort of lighten or mitigate the extent of it. So obviously China is the one we're talking about with the currency peg. So got a lot of manipulation going on. A lot of people trying these beggar thy neighbor policies. Let's get our own currency lower to help our exports. But at the end of the day, if they don't fix the structural problems that are going on with these in the global economy, this is all going to amount to nothing. And you got to prepare yourself that when we have much ado about nothing, that's going to probably pretend slower growth going forward. So you just have to prepare yourself, and one of the ways you can do that is by learning how to trade the currency market. We have great courses that we teach. We also got a Forex mentor program where you can get actual one-on-one instruction with me. So contact us to figure out how you can get involved today. So that's what I've got here for today, Wednesday. Good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.